When we talk about limited company, can you all tell me what do you mean by the term limited company?
Companies with limited liability.
Companies with limited liability. What do you mean by this word companies with limited liability? Natina?
The shareholders' liability is limited to the amount they invest in the company.
Shareholders' liability is limited to the amount they invest in the company. Can you please elaborate?
So shareholders become shareholders of the business by acquiring shares, and they do this by investing money.
So these are my shareholders and this is my company. They will buy shares of the company. Okay.
Yeah.
Then
Suppose the business goes bankrupt, their loss is only limited to the amount they invested. They're not liable for the whole money the business owes.
why is that so? Suppose this shareholder has invested $10. He's bought one share of $10, and this shareholder has bought 10 shares of $100. 10 shares of $10 each. So his share capital is $100. Why is the liability limited? Why is the liability only restricted to the amount they have invested in the company?
Because the company has a separate legal identity.
Because the company has a separate legal identity. That means the company is separate from its owners.
Yeah.
Umema, do you understand?
Yes, miss, understood.
When I talk about limited companies, when I'm talking about limited companies, the liability of the shareholder is limited. Limited, that means only to what they have invested in the company. Liability is limited only up till that extent. Okay, Atya? Yes?
Yes, miss. Yes, miss, I understood.
Now, can you all tell me types of limited company?
Public limited company and private limited company.
What is the difference between the two?
Private limited company can issue shares to only their family and friends, while public limited company can issue shares to the public, like everyone.
Okay. What are the difference? What is the other difference between the two?
Private limited companies can only have a limited number of shareholders.
Okay, limited, how much limited?
I'm not sure, is it 200?
Okay, they cannot have more than 200 shareholders, okay?
And then public limited company, it's unlimited.
Okay, don't you think you're confusing partnership with limited company? Private limited, public limited company should have an authorized share capital of $50,000 or more. Okay, and private limited company, anything less than that is fine. Okay, with the number of shares you distinguish between partnerships. Okay. Come on, next, what other distinguishes there between the private limited company and public limited company?
Public limited company shareholders can sell their shares in the stock exchange market.
Okay, the shares
Whereas,
of the public limited company are listed in the stock exchange.
yeah, listed in the
Okay, what
stock
about
exchange,
private?
and they cannot sell their shares on the stock exchange market.
They are not listed.
Yeah, they're not listed.
Okay. One more distinguish, last one. One more distinguished, last one. Private limited companies have PLC written at the end of their names, and public limited company will have LTD written at the end of their names. Okay, so this is about distinguishing between the different types of companies. Now, can you all tell me different types of share capital?
Ordinary share and preference share.
This is types of shares. What you are telling is types of shares. So we have two types of shares. One is ordinary shares and one is preference shares. Okay, but I am asking about types of share capital.
Issued share capital and I don't know. Not sure.
And we have authorized share capital. First is what? Authorized share capital. What is authorized share capital? What is authorized share capital?
Total share value.
Sorry?
The total shares value that are issued.
Share. No. Umema, what is authorized share capital? Authorized share capital is the maximum number of shares that the company is allowed to sell during its lifetime. Maximum number of shares that company is allowed to sell during its lifetime, or I can say it is the shares that which the company is registered, share capital with which the company is registered. It is also called the registered share capital or nominal share capital. Can someone please repeat for me what is authorized share capital?
It's the maximum number of shares a company is allowed to sell.
Okay, so this is the maximum number of shares the company is allowed to sell. How about issued share capital?
Total number of issued shares.
Okay, so it is a total number of issued shares. Can you please elaborate on this?
It's the number of shares the company is listed for people to buy.
This is the number of shares which is listed. That means this is the number of shares that they can actually sell during its lifetime. They can sell during its lifetime. They have the permission to sell these shares. When I talk about issued share capital, it is the one that they actually sold. This they can sell, but this is the one that they have actually sold. Okay. This is the one that they have actually sold. Okay. Can I say issued share capital is a part of the authorized share capital?
Yeah.
Yeah. Okay. Atya, Umema, any doubts with this?
No, miss.
Okay, come on, let's do it again. What is authorized share capital?
Maximum shares a company can sell.
Okay. What is issued share capital?
Actual shares that are sold.
These are the shares that they have actually sold in the market. Okay. Now, when you sell shares or when you write something about share capital, you write, suppose I'm selling 20,000 shares. So the way you write it is 20,000, whatever type of share you are selling, ordinary shares or preference shares. So you write it 20,000 ordinary shares of $10 each. Can someone tell me what does this $10 represent? Can you all see my screen? What does this $10 represent?
The face value of one share.
This $10 represents the face value. This $10 represents the nominal value of the shares. Okay. Authorized share capital done, issued share capital done. Now I want to know one thing. When the company is issuing shares, is it okay if if the shareholders are not willing to pay the entire $10 together?
Yeah.
It is okay if the shareholders are not willing to pay $10 together?
They can like pay half of it and then they can pay the other half later.
So who will decide what amount will they pay when?
The company.
The company. Okay. Now the company should know that if they are looking at huge investors or they are looking at investors who are buying many shares, they cannot pay the entire amount. They cannot pay this entire amount together. So what does the company do? They divide the money. Okay, they divide the money into installments. Which money they divided into installments? The face value. Say face value is $10. Now look over here. Issued share capital is what they have actually sold in the market. Suppose they've actually sold 20,000 shares of $10 each in the market. So this is the issued share capital, but out of which they only ask the shareholders to pay $4 right now. So when they ask the shareholders to pay $4 right now, what will this be called as?
Paid up capital.
Paid up. Or another thing. They have asked the shareholders to pay $10 right now. So when the company has demanded the shareholders to pay a part of it, not the full amount, this will be the called up capital. What will it be?
Called up capital.
Called up capital. Suppose the shareholders do not pay $4 right now. They only pay, some pay $4, but some pay only $1. And $3 is still unpaid. So this is also called something. Can you all tell me what is this called?
Calls in arrears.
The one that is unpaid is called calls in arrears. And one that is paid is called
Paid up capital.
paid up capital. Okay. Okay, so what are the different types of capital that we have discussed up till now? One, authorized share capital. What is authorized share capital?
The maximum amount of shares a business can sell.
Issued share capital.
The actual shares that the business has sold.
Actually sold. Okay. Called up share capital.
The amount that the company has demanded from the shareholders to be paid.
Natila, what is wrong with you? Why are you not answering? Paid up.
The amount where the company has actually received money.
Received, okay, they've actually received money. And calls in arrears?
The money to be received by the company.
The money that the company has called up, but they have not received. Okay, the money that the company has called up, but they have not received. Now we are going to talk about entries related to issue of shares. Do you know what is the entry to call capital or to create share capital? What is the entry issuing share capital? Okay, listen to me. Now, can you see this over here?
Yes.
Okay, this is the way we write when we write it in our equity and liabilities, the share capital part. So we write 10,000 shares. Which shares? Ordinary shares. So first the number, then the type of share, then the face value of the share, and then the called up value or the paid up value. Normal situations, called up value and paid up value is the same. So when you write share capital, you write it in this way. What is the way? Total number of shares, type of shares, face value, called up value. Okay, so we say 10,000 ordinary shares of $10, each $5 called up. Am I clear with this? How will you all write it? Natila, can you tell me any random example of writing shares?
2,000 ordinary shares, $5 each, 5 or 2 called up.
$2 called up. Umema, can you say?
Five ordinary share of $10 each and $5 called up.
Okay. Atia?
3,000 ordinary shares of $30 each, of which $20 called up.
Okay, fine. Now listen to me. When you issue shares of $10 each, now how the process goes? First, the company will issue the shares. What will the company do? They will issue the shares to the public. Say they issue the share of $10. Now the company at the time of issue is going to give them a pattern where they have to pay in parts and parcels. So the company says, say for example, if the share is for $10, the company will say $5 you'll have to pay at the time of application. You have to pay $5 at the time of application. That means the company is offering the shares to the public and asking the public that whenever you want to apply for my shares, you have to pay me $5 immediately. Once you apply, you pay. How much? $5. Then they say, for example, any pattern as the company feels fit, they can give. Then they say you give me $2 at the time of allotment. Now it is not necessary that all those who apply for the shares are allotted with the shares. So those who get allotted with the shares, they have to pay $2 to get the share certificate. 7 done. Then they would say, I will call for the money, and as and when I call for the money, you pay me the call amount. So they say $1 would be my first call. First time I call for the money, 5, 6, 7, 8. And $2 would be my second and last call, second and final call. And you have to pass journal entries related to the same. Am I clear? Natila, do you remember the journal entries related to application of share? Shareholders apply for the shares.
This is just like share capital credit and then bank debit.
So immediately as the shareholders apply for the share, will I create the share capital?
So you create like an application account?
Yes, you will create an application account. Now listen to me very carefully. I want you all to write simultaneously. Application allotment, first call, second call, final call. This all is decided by the company. And they ask us to pass journal entries related to application allotment, first call, second call, final call, whatever it is. Now here my case is where I am issuing shares of $10 at $10 each. And we will talk about one share only right now. That means $10 share I am issuing at $10. I am issuing at par. What am I issuing my shares at? Par. $10 shares issued for $10. That means I issue the shares at par. First entry for application. Anybody remembers?
Application credit and bank debit.
Shareholders will pay the company. Company will receive the money. Money will come into the company. Bank debit. I will receive the money and I will create a separate account, and the name of that separate account is share application. Bank debit, share application credit. That means the company has received money when the shareholders have applied for, and it was not 10 for application. How much is for application? 5. Can you see this? Okay. Then what will the company do? People have applied for the shares. If I accept the application, I am going to close application account and create capital account. If I accept the application, I will close application account and create which account?
Capital account.
Capital account. I will close application account and create capital account. Fine. So the second entry would be to create capital. Share application is credit. If I want to close the application account, what will I do to application? Share application debit. I will close application account and create capital. So it would be share application debit and share capital credit. Just tell me once you are done with this. first entry would always be first people apply. So it is bank debit and you create application. Done? Umema Atya done?
Yes, Miss, done.
Okay. After I complete application, first is people apply. So bank is debited. From the second stage onwards, company will call for the money and people will pay. I am repeating, after application is done, after your stage 1 is completed, company is going to call for the money and the shareholders will pay. Here they first pay because they are applying. Second stage onwards, who's going to call for the money? Company is going to call for the money. Application is done. Now the company is going to call for what money?
Allotment.
Allotment money. So the company will create an account which is called what? Share allotment. So the second entry would be share allotment debit. And as they call for the money, they create the capital. Share allotment debit, share capital credit. So when the company calls for the money, they create the capital. What would be the third entry?
Just why share allotment debit?
Because now the company is calling. Initially, I received money and I credited share application. Okay, I put this money in an account called share application. Now I have received application. Now I just need to allot them, the shares. So first I will call for money. Then when I receive it, I will credit share allotment again. From the stage 2 onwards, company is demanding. And as and when they demand, they create capital. Stage 2 onwards, company demand, and as the company demands, they create capital.
So this journal entry is for the demanding stage?
Yeah,
for
this journal entry is
allotment?
for demanding. You can say that. Okay, what would be the next entry to create capital?
So it would be bank debit and share cap or share allotment credit?
Yes. So then I will first demand, then I will receive money. First I will demand. Then I will receive money. And I will close allotment. So the entry to receive money and close allotment would be bank debit, share allotment credit. Receive money and close the allotment. Come on, can somebody give me the third part? First call. Or you'll write this first. Umema, give me the entry for the first call.
For the first call, the bank debit and share application credit, that one?
No, that was the that was the entry for application. Okay. In application, first I receive and create application. In application, first I receive and I create application. Then after that stage, first I create capital and do allotment debit, create capital. Even in the first call, what will I do?
I'll create first, right?
I will create capital. What will I do?
Capital. Create
I
capital.
will create capital. What will I do?
Create capital.
So if I'm creating capital, I have to credit capital, right, Atya?
Yes, miss.
So if I create capital, I have to credit capital. So I will say share capital credit. What will I debit, Umema?
Will we debit bank?
First I will demand, then shareholders will pay. Shareholders will not directly pay. So I can't debit bank. Atya, can you help her?
Share allotment?
Allotment, no, we are on the first call stage. Natila? What will I debit?
Call capital?
I am creating capital, so I credited share capital. What will I debit?
Yeah, I said called capital.
Share first call. To debit share first call.
Okay.
Okay, what will you debit? Share first call debit and share capital credit. Let's move ahead. I have demanded capital. I have demanded the first call. Now what will happen?
Now we'll write bank, right? Bank debit.
But what does that mean?
We are receiving now. First
We
we
are-
demanded, now we are receiving.
Now we will receive the money. So when we receive the money, I will say bank debit. And what will I credit?
Share first call debit. I mean credit.
Share first call credit. So this is the entry to receive money and close the call account. So this is the entry to receive money and close the call account. Come on, next entry. Now I have the final call. Now I have the second and the final call.
But we do the same thing, except for share first call, we write share second and final call.
I want the answer, not the same thing. Tell me.
Okay, so for the demanding part, we do share second and final call debit and share capital credit.
Share second and final call debit. $2 and share capital credit. Very well. How about receiving money? After this, Umema, what we'll do?
After this, bank debit and share second and final call credit.
So this is the entire process of passing journal entries. I want someone to summarize this for me after writing it. Atya, come on, tell me what is the process? How does the company call for the money?
So first we create capital, then
First application.
First application, then we allotment, and then where did I write that? The journal entry for application will be first will it will
Application,
be share cap
allotment, first call, final call. Again, come on, repeat.
Application, allotment, first call and final call.
Okay.
And then the journal entry for application will be share capital credit 5. That's what I wrote. So first we'll create capital. Share capital will be debited. Share application will be debited, and share capital will be credited. Then
First, receiving money for application. Can you please repeat?
Share capital debit and share application debit and share capital credit.
No, this is creating capital. You've not given me entry to receive the application money.
Is it when the company demands for the capital?
No, you have to give me entry to receive the application money. In application, the shareholders will apply first. After application stage is over, company demands and then the shareholders pay. Umema, can you help her?
Bank debit and share allotment credit.
Atya, you're still on the application stage. Umema, can you help her?
For application, right? Bank debit and share application credit.
Yes.
We receive money and then we demand.
Money, create application. Then?
Then we demand money. It's share capital, share application, debit, and share capital credit.
Look over here. How is it? Receive money, create application, receive money, create application, close application, create capital. Receive money, create application, close application, create capital. Natila, can you please summarize this stage 1?
So the first stage is when the people interested in the shares apply for a share, and the journal entry is bank debit, share application credit, where we receive money, and then we close application accounts and create capital accounts, so share application debit and share capital credit.
Then stage 2 onwards, Umema.
Yeah, stage 2. First we demand and for that share allotment is debit and share capital is credit.
Okay. After you demand, what happens?
Then we close the money. We close the account and create
and receive money.
So bank.
We receive money, close allotment.
Yeah. So bank debit and share allotment credit.
Okay. Next stage.
Final calls, right?
First call.
Yeah, first call. Sorry. Share first call, debit, and then share capital credit.
Is this the money to demand?
Demand, yeah.
Okay, very good. Atya, what happens after demanding?
After demanding, we receive money, which is bank debit and share first call credit.
Then
we will do second and final call, where shares second and final call will be debited and share capital is credited. Then we'll receive money and close allotment. Close Yeah. No, wait.
Close the final call. Okay, last thing just to add up is we create capital, okay, only when we demand. What does this mean? I will just tell you. My face value is $10. Say for example, okay. Application money is $2. First call $3. No, allotment $1. First call $2 and my final call is $4. Company has only demanded up till the first call. Tell me how much will be the share capital? $10 or $6?
6?
Why?
Because you said we create share capital only when we demand, and we demanded
Yes.
up till the first call.
Only what you have called up, your share capital will be limited to that amount. Okay. So I have called up till my first call. So my share capital will be limited up to the first call. What I want from you all is, I think you all have done the work and you have written the journal entries. You all can post it in the chat box. By the end of the day, I want you to memorize this part and again give it to me in the chat box, and 2 sums of income statement. Natila, you are doing income statement, right?
Yeah.
Okay, you can give me 2 sums of income statement. How much have you done after Ismail?
What's the next question only?
Okay, so you do 2 sums.